Good morning, everybody. It's Chris here from Serene Education with the 4 Majors Notes update for the 7th of November 2013. Morning, guys. Looking at the 4 majors this morning, starting with the euro against US dollar, using the FX8 Ultimate template. So let's have a look at the euro against US dollar. Remember, Thursday today, tomorrow non-farm payroll, Thursday today, a hell of a lot of news, guys, to start with. I want to press that on. I'm going to say there's a ton of news up before non-farm payroll. And we start with euro. A lot on euro this morning, followed by sterling this afternoon at 12 a.m. GMT with asset purchasing facility. Are we going to see a continuation of their 375 billion pound purchasing plan? Plus, we also have the sterling official bank rate. Are we going to see a change in the interest rates announcement? Question mark. We have also the MPC rate statement. Then we're going to have, well, probably Carney will probably be having a chat at that same time. Then we go on to the interest rate announcement for euro at 12:45. Quarter to 1 GMT, we have the interest rates announcement for the Eurozone, plus followed by Draghi saying a couple of words for the ECB press conference that follows at 1:30 GMT. Then we go into the US market news. We have advanced GDP quarter-on-quarter figures, very, very important. They're expecting, funny enough, a 0.5% less figure. Previous figure was 2.5%. They're expecting a forecast of 2%, so a drop there of 0.5. And then we have unemployment claims, followed by a number of FOMC speakers speaking later this evening, later this afternoon for us, at 6:30 GMT. And then this evening at 7 o'clock, we have ECB President Draghi speaking yet again. So a lot of news out today, guys. And this is before non-farm payroll. Let's have a look and see what the euro against US dollar has done. 4 hour time frame in front of me. That's the time frame I'm looking to see any movement on. And straight away, the thing that kicks me in the head here is very much the consolidation we've had over the past couple of days. In fact, since the 1st of November, we haven't really seen any further movement to the downside. In fact, we're trading here at our monthly fib levels at the 13,490 and change. And price hasn't really done much. It's consolidative, but we haven't seen any further negativity to actually push it down. We had a bearish candle here, however, not really moving with a lot of sentiment because the actual SMA indicator here was pretty much telling us we shouldn't have been looking short on this 4 hour time frame, primarily because it was above the zero level. Below, you can see here on the initial attempts to the downside, even though on these hammers, in fact, you can see that we were very much below the zero level, even though it was consolidative. However, the more we went into this consolidative range, the more the OSMO started to climb above the zero. So the longer she does, if she spends time above that, more likely is we're going to see a potential bounce or support. And at the moment now, the 4 hour candle is testing the prior high, so the 4 hour highs. And if we do get a nice bullish engulfing breakout to the upside, we could expect price to head off towards that institution moving average above us, roughly around short of the 1361 and 20 change. By then, hopefully the RMO is crossed above the zero line and we can start looking for a potential bounce higher. The reason why I'm saying that is because if I just get rid of this and then move to my daily, you'll notice, and I'll just bring it over, you'll notice my major trend. You'll see straight away where price is trading right now in cahoots with this major trend to the upside. Okay, so we have a lot of consolidation over the past couple of days, as I mentioned, this primarily being my monthly fib. So we are at a consolidation area. We want to see something happening in the 4 hour, i.e. you can see a lot of highs here, no breaks to the upside. Yes, one or two little movements to the upside, but no clear close, and that's the 4 hour close we're looking for. If I just move back to the 4 hour time frame, you can see here no genuine closing with sentiment. Okay, and this is where it's so important. We should get a 4 hour candle break high if it is positive sentiment here, building on this current support level. Then we should see the RMO across above, enter. Target 1 will be here at the institutional highs. Ultimately, we could always move way back from the highs we've just come from. So if you want to take a reading of fib level from the current highs intraday to the current low, let's get this spot on. We don't want to have anything. You can see that my 23.6 is still very much a resistance level. Break above that, then I can head towards my 38.2, which complements my institution above the 50, 61, etc., etc., etc. So be patient here. A lot of news out today. Would that factor into potentially what's likely to occur near term? You betcha. So patience is a virtue. Please manage it. Just be vigilant. You'll be surprised. You don't want to end up being part of the speculation group, which will be out in full force today. Rather let the market tell you what's happening, and then you trade what happens after that. Moving on to sterling. 4-hour here again, also very consolidated. We've seen a bit more upside for sterling other than the euro. You can see pretty much more positiveness across the board. Yes, there are 1 or 2 areas where we're seeing a bit of negativity. However, the overall sentiment on this particular pair is one of upside. The institution is being tackled right now on the 4-hour time frame. And if you look at if you take a nice little fib reading intraday from our current highs we saw through the latter part of October to our current low we saw here the start of this month, you'll notice that my 50% retracement complements the institution moving average. So very, very important. If you are to see further upside, then obviously you want to see price trading above the institution. And if you look at the institution reading down here on our indicator, you'll notice that price is trading above every single one of those, or every single one of those institution moving average readings on those time frames, bar the monthly. So positiveness and the RMO is pretty much complementing that. So we have a trend relating indicator really complementing the institution moving average, which is a very good sign for positivity. We're seeing a lot of positiveness out of the Eurozone. Out of sterling, apologies. A lot of great news coming out, and long may it continue, because that happens, we're just going to see higher highs. And all we've got to do now is just be vigilant, get a nice a more bullish confirmation candle from this particular pair. We have, as I mentioned, the interest rates announcement this afternoon. Are we going to start seeing a stance towards potentially tapering, etc., as this positive news comes up more and more each week, each month, etc. for sterling? Question mark. But at the moment now, I'd like to get above this out of this consolidation range, whether it be bullish or bearish. Either way, I know exactly where my targets are, long or short. So here, got to be patient and just wait for price action to give us or tip her hand. US dollar Swiss franc, 4-hour chart. You can see I've taken my current low to my current high. You'll notice that price has been very, very consolidative at a price support and resistance level. Just move this across on my 4-hour. You'll notice that price over a period of time has come unstuck at this level. So you've got to make a note of it, because if it's a major resistance level, you want to be aware of it. So there again, I've just drawn a nice little green line through here, lime green, 91.39.44. Got to get above that on my 4-hour time frame to even contemplate looking for further long opportunities on this particular pair. Notice the indicator box very much all over the place. More negativity, and that's pretty much the same, because if euro's more positive, then you expect the US dollar Swiss franc to be the total opposite. RMO is still above on the bounce. However, the longer we fail to break above this current resistance level high, the more the RMO is going to start looking to the downside. OSMO has clearly moved lower, and that's primarily because we're consolidative. So two things are going to happen here. Either the 23.6 intraday level over here is going to be breached, and then we're going to head towards that institution as our first target. Really aggressive in, out at this level. And if it gets below the institution, then we should look for potential lows, or back to our current lows we saw back in our latter October to be our ultimate target, because this current resistance level has been too strong and it's forcing the US dollar lower. The other scenario would be great news for US dollar sometime today, or negative for Swiss franc. We get a nice bullish breakout. Okay, ideally on this particular pair, because we're trading at a very strong support and resistance level, I'd like more of a daily close. For yeah, depending on how big the 4-hour candle is, but primarily I prefer to give this one a lot of leeway. I'd probably give it a daily close, a more confirmation close. And when we've seen here on a 4-hour, we have had breaks above here. We've had a couple of pullbacks, but those pullbacks have not been genuine. Okay, so here I'm going to give this one a daily close higher, and then I'll start looking towards my weekly 23.6 levels at the top here, etc., etc., etc. There's more than enough over here once I get above this level to here, comfortable 128 pips without any resistance, and that's good because it's above the institution at the moment now, above the 20, above the 50, above all my moving averages, my 4-hour time frame. Fantastic. I just need a clear break above this resistance level. Don't get it, I don't look long. I look for potential pullbacks, and that's my scenario here. Trigger alert above, trigger alert below, and wait patiently for this particular pair. Moving on to the last pair of the day, the US dollar Japanese yen. Here again on the 4-hour, look at the resistance here, guys. We've been at this level here in mid-October, failed. Being here just recently, the start of November, failed. However, you'll notice this one over here, we're not seeing any lower highs. The swing highs are still there. So price is the US dollar is still looking to move higher, but it needs to get above that as soon as possible, because at the moment now we're starting to go into a very tight wedge, and we've got to see a breakout. You can see a lot of consolidation on the 4-hour time frames. Price has just been miming around here at 98.74 and change. got to get above it. Notice the indicator box very much blue, so I'm looking for more positive upside, but I need to see a break up and close further for this to be genuine upside. Very, 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 very important. Because if I go to my daily, you'll notice we've been in a very strong consolidative wedge formation. Still seeing swing, and you can see now on the daily 98.74 we have been here in October, so it's very, very important. This to be genuine sentiment from the US market. We need to see a genuine daily close above this, and I'm still sitting on the fence for this particular pair. I'd rather see price trading well above the 100 here for longs, and then below my monthly fib, sorry, my weekly fib here 23.6 for shorts, because it'll be way below the institution. You can see here on the institution moving average, low price being supported on the daily, and as long as she maintains above that institution, I should be looking for positiveness. Okay, very, very important. Always look at the daily, look where she's trading, look at them, and then look to trade, or that's going to tell you where your sentiment is going to be lying intraday. So very, very important. Here, straight away, more positiveness, so I should be looking for buying opportunities. However, want to see a clear break of this current support and resistance level higher. It's been here since mid-October, guys. There's a valid reason for that. Got to break it. If you don't see a bullish engulfing break above it, you can see here on a number of occasions we had a candle close, not bullish enough. Yeah, shooting stars, and what happened was price failed. Here again, a break, but not a very convincing break, and price failed. So we need to see a very convincing bullish engulfing candle. On this particular pair, for me, going to give the daily away to it, because I want to see a genuine daily candle move. If I do get it, then it's going to likely tell me what I should be looking for in terms of targets, etc., long term, and that's what I'm looking for. So got to be patient here. Put my trigger alerts in, sit back, relax, let the market do its thing, because as I mentioned to you, we've got non-farm payroll, we've got a lot of news announcements today in particular. There's going to be a lot of volatility flying around, guys. Is it going to be genuine? And that's what I'm looking for. I need to see genuine volatility in the market, genuine sentiment, and I need to see a direction. At the moment now, I'm seeing consolidation on most pairs. Got to see direction. Once I get it, then I can start looking at my cross pairs, because all those things, I'll know exactly what that needs to be doing, because that's doing that. And that makes my life a lot easier. So patience is a virtue. Just sit back, let the market tell us, tip a hand, and then we can look to trade comfortably for the next couple of weeks. Okay, guys, going to leave you with that. Please back it up with sound money management, guys. If you are using this template or any of your own templates, got to have sound money management rules, guys. So important. Then keep it as simple as possible. The charts are they're difficult already. Don't need to make them any more. Just keep them as simple as possible. Have a strategy plan and back up your strategy plan and follow it meticulously. Okay, leave you with that. Have a fantastic trading day, and I'll catch you guys first thing tomorrow morning. Until then, you guys trade serenely.